yen has hit a new 34-year low. And of course, the US dollar has been pretty strong lately. Inflation showing no signs of coming down decisively. Let's bring in Adam Button, Chief Currency Analyst at ForexLive. Adam, we're going to get Adam in a second. Interestingly, of course, the yen is weak against a background of Japan gradually letting interest rates rise. But there's the number of yen it'll cost you to buy a US dollar. Adam joins us now. Thanks very much for coming on the show.
Thanks for having me, Andy.
Adam, so the Japanese have moved to let borrowing costs rise a bit, but still the yen weakening because obviously their yields are still fantastically low.
Well, that's really it. I mean, you have an opportunity to borrow at less than 1% in Japan and invest in the entire horizon of the world, really, for 5, 6, 7% at really risk-free rates. And that's just created a tidal wave of money it's leaving Japan. And as the yen weakens, that trade becomes more and more compelling. Without any sort of rate hikes or meaningful rate hikes in Japan, there isn't much that they can do to stop it right now, short of intervening.
Does it worry the Japanese? I guess it makes their exports more competitive.
That's it. They're trying to emphasize a little bit of the upside in it, but political pressure is growing, and we're seeing that sort of day after day. They're getting questions, and just this week, sort of the last leg down in the yen was officials being asked, "Okay, you need to intervene," and they came out and said, "Listen, this is really fundamentally driven. The U.S. is strong. We have low inflation. We don't really think this is the level to do that." And really that just gave the market another green light to push higher. And we've just been making new 34-year lows in the yen every day really for the last month. And it's a tough one to fight right now.
So is there a giant global carry trade, people borrowing money in Japan and investing it in higher returning assets elsewhere?
That's it. That's what's fueling it. And we see this, if you go back to before the financial crisis, it's really just a sort of trickle and then a flood of money that just keeps chasing it and driving it, and it feeds on itself a little bit. But then when there's a recession or some sort of dip in U.S. fundamentals like inflation falling that everyone's been waiting for, it's a rush to the exit in the other direction. So at that time, if you remember, there were days, a lot of it was going into the Kiwi and the Aussie in those days, which were yielding 7 or 8%. And then we had days where they were falling 10% in a single day as the trade unwound. So this is sort of the nature of this trade. It goes and goes and goes, and then the bottom falls out of it when something changes. Unfortunately for Japan, it's been 3 years of this now, and there's not a lot of signs that it's about to end.
I'm trying to think, are the Japanese, the Japanese bring in their energy, don't they? So that's got to be hurting.
It's amazing.
Sorry, go ahead.
Japan has been able to avoid the global inflation. I mean, it really has been a global inflation shock around the world, and Japan's been looking for inflation for the last 25 years. And this all unfolded really in a way they might have hoped, but inflation maybe ticked up to 3%, not the 6, 7, 8% that it got to in the rest of the world. And so that's made the market even more confident that something about Japan is just incapable of generating inflation that's going to meaningfully raise rates over the medium or long term.
It's such a strange country in a way, isn't it? I mean, they're almost crime-free. They have free health care. They're very different from a lot of other nations, but of course, they have a big demographic problem. Could you talk to us about the U.S. currency? Maybe we'll put up a 10-year chart for the U.S. dollar. Is the rising U.S. dollar lately causing problems around the world?
Right. This isn't just a problem in Japan. We're starting to see places like Indonesia. A lot of the people who are heavy importers of commodities, especially emerging markets, that are starting to feel more and more of a strain from the strong U.S. dollar. And we know the story why the dollar is strong. The economy's been strong. The U.S. is running deficits at 7% of GDP. Rates don't look like they're going down anytime soon or as soon as we might have hoped. And so you worry that somewhere something is going to break because of high rates and the strong U.S. dollar. And days like today, when we see the dollar strengthening further, those risks get ratcheted up slowly. And so it is a big problem. It's a growing problem. There was a meeting this week between Japanese and Korean officials trying to maybe strategize together. China would also like its currency to rise. And even the U.S., there's a story this week that Trump wants to weaken the currency. So there's a lot of alignment here in rejigging FX, but right now the fundamentals are what they are.
That's it. What did you say about the Chinese? The Chinese would like their currency to go up?
Yes, that's it. They've seen it steadily weaken, and they've been leaning against that. Even as an exporting country, they don't want to undermine their own currency. And that's a lot of the strength in gold that we've seen this year has been Chinese consumers and institutions, and of course the central bank, for different reasons buying gold. But consumers are seeing their dollar weaken, and they're looking for something, and they're increasingly turning to gold. And that's been, one of the great stories, or one of the great trades so far this year. So much of the world doesn't want to see the U.S. dollar get much higher. And I think we're probably in the 7th or 8th inning of this dollar rally, but it's not going to turn until inflation does. And I think that's coming sooner than the market expects, but we're taking it one data point at a time right now.